Hello, friends. Back at it with another Forex Friday video for you.
Oh, yeah.
All right, well, let's get started. So let's scroll down here. We'll just get a quick overview of the top currencies. So DXY trading mostly flat. Same with Euro USD, also flat despite all the craziness going on with interest rates going up. We'll talk more about it in a second. And then we have USD Jpy down a little bit. Yen has been on somewhat of a tear recently. Oh, what's the wrong one? Somewhat of a tear recently. And then we have British pound and USD also trading flat. But let's go ahead and jump into the charts. Oops. There we go. Okay, so this is Dxy Daily Chart right now. As you can see, after this big impulse up, we definitely have had a reasonable retracement, though that should probably have been expected, just given how much of a tear it's been on. But let's mark up some of these areas. So we got this little range right here that it looks like we're dipping back into, testing it. Now, area of interest. So we are, like I said, back into this little consolidation range that we left after this big impulse, and very possible we come back into fill this imbalance right here around the, call it, what is this, 105? That's basically what it is, right? Yeah, so lines up pretty well with the psych level, almost exactly, to be honest. And why I call this an imbalance, Jesus Christ,
You're a fucking idiot.
is because of this large impulse right here. So we had pretty standard price action, and then this large push up, a lot of just buying, no selling really taking place. A lot of leftover orders potentially in this region. So price coming back to refill that imbalance. And you can see we're already getting somewhat of a reaction potentially. I mean, look, you could have said that here is just a wick. Don't read too much into it. But this is the level I may be looking up for, because usually, very often, when price leaves a range, it comes back to retest it. So that is very possibly what we're seeing before an eventual continuation back higher. I do think longer term that the dollar is headed higher, just because the flight to safety and the liquidity crunch that's driving people to the dollar, the safest, most liquid asset. That may be hard to believe for some.
Right.
But it is technically. Treasuries more specifically, but when people flee to treasuries, they flee to the dollar. That's really the same thing. They sell euros to buy treasuries, which are denominated in dollars, hence the dollar appreciating relative to the euro. But anyway, so that's what I'm seeing right now with the DXY. Still maybe expect some short-term weakness in dollar pairs. Could see a bounce soon, though. Also, potentially, I would say my base case is definitely a continuation eventually of this trend back up. But if we see it go back below this range high and show weakness, maybe the dollar's unable to kind of break above that range again, it could be a sign that we're going to be headed back into this range. Again, that's not my base case, but got to be aware and prepared for everything. And then we'll go ahead and map out this range as well that we were, or kind of technically are, still operating within. There we go. So range 1, range 2, those are the levels you want to watch out for. If we hold above this range right here, now regardless of what happens, we come back in, hold the range, very good chance we head to the top again. That's just how range trading usually works. Conversely, if we can't hold that level right here, the range high, very possible we head all the way back down to this range low. But we're at a pretty pivotal point, so I would definitely look out for this 105-ish level, see how price reacts if we do start seeing a continuation of the previous uptrend. Like I said, that's probably my base case, but I'm prepared for anything. I want to see how it reacts at this level if we head lower, and then obviously I'll take that in stride with any dollar pairs that I end up trading or looking into. So now that we covered DXY briefly, I'm not going to get too into the weeds with it. And I mentioned this before, but just keep in context that the DXY is almost entirely the euro. It's like 50% of the basket. So when you're talking about DXY strength or weakness, you're basically talking about strength or weakness relative to the euro. And then I think another, actually, let's just look this up. This will be important. So Dxy Weightings. If I can figure out how to type. Okay, yeah, so 57.6% is the euro, 13.6% the yen, 11.9% is the pound, and 9.1% is the dollar. So realistically, when you're talking about strength or weakness, you're basically measuring that against the euro almost entirely. I mean, over 50%, almost 60% of the whole basket is the euro. So you might as well just be looking at Euro USD, basically. And then 13.6% yen, so sizable weighting, but not anything super crazy, roughly the same as the pound, and then a little bit less for the dollar. But I think it's important because a lot of people, when they look at DXY, they think it's just a basket of all currencies kind of evenly weighted, but that's just not the case. Not that the dollar isn't appreciating relative to other currencies, but when you're looking at the DXY, you aren't necessarily getting a full picture. So that's important to keep in mind when you're looking at the DXY, considering how it relates to other markets, currency markets. But yeah, so let's transition. Let's talk about Euro USD. So for those who are unaware, I'm sure someone's at least heard something about it. The 75 basis point rate hike that was mostly expected. So my estimation is that that's probably why we didn't see a huge reaction, because it wasn't a surprise to the upside or downside. That was in line with basically what markets were pricing in, meaning the interest rate differential between Euro, USD, or USD and any other currency was pretty unchanged. It was already, for the most part, priced in. Let's get these ranges. So we had this range right here. Let me get some coffee. It's a slow morning. We're having a good time, guys. Woo! All right. So yeah, this was a range that we were trading in for some time. And let me see, where is... oh yeah, we're looking at the daily. Okay, so this is a while ago. And this is where the dollar kind of broke parity. The euro broke parity with the dollar. You see right here. You look at this level right here, 1 to 1. I think my screen's in the way. You can take my word for it.
Totally.
Okay, so yeah, right around this area, let me get the pen out. Right around this area, we broke parity, huge level. I think it totally makes sense that we're reacting to it. Big psychological level. Wouldn't be surprised if this ends up being a short-term bottom. And it looks like we already kind of reacted, or we are reacting. Break it down, a little 4-hour chart. So you can call this another kind of range, right? Call it the parity range. Now, we didn't touch it or come back into it yet. Certainly possible, but I think it's very, very possible. My base case would probably be that this is a short-term bottom before we see maybe a return back to retest this previous range that we left, because we haven't tested it since. We came down pretty hard, bottomed around that parity level, came below a little bit, showed some serious strength to rally back above off of that parity level. And now we're kind of in this range right here. Now, I would not be surprised in the least to see price bounce around in this range and come down to pull potential liquidity from this zone, this area right here, and then continue higher. But there's not really too much to... I'll break it down in the lower time frames in just a sec, but from the daily 4-hour perspective, not anything that's screaming good risk to reward or good opportunity, in my opinion. Like I said, I do want to eventually see Euro bounce a little bit, maybe get back into this range, possibly even break these highs over here, pull liquidity from this untested zone. I think that would be pretty ideal. Maybe even bust above it. I don't know. But I think Euro's been smashed long enough that we're probably going to see a little bit of a relief rally continue, this being the short-term bottom. Hard to say how much strength we'll see, if any, but that's what I would be looking out for. So possibly looking for longs in this general area right here. And then at the very least up to the previous range to test it. That's probably what I would be looking at. Now, this is not ideal. I like to shoot for at least 3R. But maybe just sacrifice that entry a little bit. So this is just an idea. I don't think this is as convincing maybe for a long, but it's definitely something I'm eyeing because like I said, I think we could be in a short-term bottom, kind of break a structure. Haven't really proven a break a structure yet. Kind of complicated to eye that out because of this staircasey price action right here. There isn't a definitive high that you could point to as a break a structure, although someone might say, or some might say, that this level right here, there we go, wait, no, that level right there could be the break of structure. So now presumably we'd be making a higher low, which would really be anything above this, hence this zone right here where we had a lot of consolidation liquidity. So yeah, I'd be watching for this range, maybe look for a little bit of pullback below the actual range low that we established right here. Pull liquidity by running those stops, grab liquidity from this demand zone, and then continue higher up to this previous range. That is my kind of hypothesis, I guess, what I'm thinking about right now.
Yeah.
We'll see how that plays out, but that's kind of in the interim what I am looking at. Now let's break it down to the 15-minute, see if there's anything of interest. So we're kind of hovering near this midpoint. I usually call that no man's land when it comes to trading. Obviously, that's the higher time frame midpoint. So the further down you go, that can kind of change. Now, what am I seeing right here? We had this pretty big impulse. And so just to backtrack a little bit, right? So I'm talking about how potentially being bullish on the euro, if it gets back to this level, could go higher from here. This is why I don't usually like to trade when it's in no man's land, because I don't have a higher bias informing my lower time frame bias. But if I was focusing on this lower time frame, let me break down the structure. So we have this low. We made a high, made a higher low, made a higher high, and we made a higher low. So what I would like to see is eventually a push above this high without breaking this low. Now, that could be a just complete continuation from here. I wouldn't be taking this trade myself just because, I don't know, it's not as, my conviction wouldn't be through the roof, so I'd rather just sit it out. I don't have a problem with that. But this, something to the effect of this, I'd probably try to get a lower entry a little bit, target this high at the very least, maybe give a little bit more breathing room on this stop, run it to close to 3. Yeah, very possible we see something just straight from here. If not that, then possibly a pullback into filling this imbalance. Right, we had this slight upward consolidation, or if you want to call it consolidation, and then this large imbalance, this huge green candle that led to this right here where we currently are trading. So possibly an entry right there, maybe just your stop below. I mean, you could even just do below this wick, but I'll give a little bit more breathing room since we have that option. And then again, targeting the high, because if we are going to maintain this structure, this is the low, the high, the lower high, or lower low, and then a higher high, lower high, higher, Jesus Christ.
You're a fucking idiot.
Okay, so we got this low, we got this high, we got a higher low, a higher high, and another higher low. And again, we could be looking for a little bit of a short-term pullback before continuing to that high, which is consistent with this structure that we've just identified. And again, I think it is certainly very possible, that I mean, we're already showing maybe a little bit of strength, but I'm not here to FOMO in. I think this wouldn't be a terrible risk to reward trade. You just, something like that, targeting. Maybe I'd run this a little bit lower. Something like that, just to target this previous high. Maybe even, let me see if there's maybe even this range high all the way up here. I'd have to look to see if we have any potential areas of interest for supply to target. Realistically, I'd probably just target this high, though, because presumably we're going to make a new higher high. But yeah, that's what I'd be looking at for Euro USD. May not actually end up getting back down to this level, which is perfectly fine, especially if we are continuing the structure. I mean, you can see these higher lows forming, and I like this level a lot, though, this one. I would prefer probably to get an entry in here, target this high. So this is my ideal trade so far. If I had, box me in a corner, you say you got to pick a trade for Euro USD, I'd probably do something like this, and beautiful. You can get so we got the 3R trade targeting this high. Entry pretty ideal, just spot on right at this imbalance area. And then now I would probably prefer to have my invalidation, my stop, all the way down here, because this is the true invalidation, the lower, making a lower low if it broke past this. Now, when this happens, I don't like to, generally, I don't like to sacrifice my invalidation level, so I'll put that wherever the invalidation level is, and then I'll just move my entry down until I get the risk to reward that I like, which is at least 3. That's my minimum. So this is probably my ideal trade, shorter time frame that I'd be looking for out of Euro USD. Wow, look how fast that candle was green just a second ago. See, this is why you don't FOMO. You see that? You're like, oh, it's going to the new high. Nope, anything can change. So you want to be open, be consistent with whatever you're seeing. You don't have to, again, FOMO is the worst probably emotion you can have as a trader. It really forces you to trade emotionally. Don't even worry about where the candles are. Just look at price structure, identify what the ideal entries are, what good risk to reward opportunities are, and act accordingly. So yeah, looks like we could have definitely have a pullback to fill this imbalance. I like this. I'll be watching EURUSD, see if we end up getting here. This is Friday, so markets will close in a few hours, possibly. I don't know if what is this? Like 20 pips. Yeah, this isn't crazy. That we could totally see this. Might be more of a play for next week, early week, if it does retrace that far. But anyway, let's move on. Let's get to USD JPY. Okay, yeah. So like I said, the yen has been on a little bit of a tear. I truthfully haven't looked into it enough to explain exactly why that's happening. I know I recently was looking at the Japanese government bond, and it went all the way down to like 17 basis points, which was well below the 25 that they're trying to pin it at. I don't know if that has anything to do with it, but I remember just the other day, all the yen pairs were basically up like 1%. At least the ones where the yen is, JPY is the first. I guess most of them actually have JPY second. Yeah, so all these right here. Yeah, so they're all like down, just like they are today. Down considerably, almost like 100 basis points. The other day they were down more than 100 basis points. So again, yen been on much of a tear. Now, as you can see, I definitely missed this, but pretty clear, like supply zone right here, right? So we had this big impulse, consolidation range right here. Big impulse down. Price came back to refill it, and now very strong reaction to that level. And now we are trading in what could be demand. So you got this level right here. Now we're not seeing a very strong reaction yet. I would like to see a little bit more strength, but I still don't think this is a terrible level, because if the yen is, Now that we didn't make a higher high. That is what throws me off a little bit. I don't like to see that. Because this was the high, right? We came down here. We made... So here we go. There's the high. We made a low. We made a lower high. So I would have to say, my base case, just given that structure, is that we end up making a lower low. So I don't know if I'm really trying to fade this yen rally yet and go long USD. I think we still have some room to go down, and that kind of is consistent with the analysis of DXY. I think we could easily... It's kind of hard. It's on the 15-minute chart. Let's go to the 4-hour real quick. Yeah, so we could see, because we're still above this range, right? So I think we could still dip further down into this area right here. And I know, like I mentioned, this mostly has to do with the euro, but yen is one of the bigger pairs in there, so still still has some relevance in the yen trading pairs, especially USD, obviously. But yeah, so I think we still could see some weakness in the dollar all the way down to this level. This would be probably the pivot level. I'm eyeing to reclaim this range and continue the previous trend. But let's get back to USD Jpy. So yeah, not looking to long dollar yet. Oh my God, this looks, what a weird chart. Look at this, guys. 4-hour. Yeah, this looks crazy. But you can see the supply zone is even more obvious on this 4-hour chart. I mean, right here, just wicked right in, came right back down. Definitely telling. Actually, let's go down 15-minute, even more. Yeah, so I'm not really convinced about this demand zone just because it's not consistent with the structure. Now, we could bounce higher, make a new high, obviously, but I think you got to follow the structure and bank on a lower low. So I might be looking for sells, possibly if we see a retracement over up until here. This isn't the most convincing supply zone, but still going to point it out because it is an area of interest. So we have, maybe we do see a slight reaction. If this is a real demand zone, you usually will see a stronger reaction out of it and then a dip back in and a higher low off of that for the continuation. But if it's not a particularly strong demand zone, what you can see is just this kind of staircasey upward consolidation, and then boom, a pull from this, and then continuation back down. So if you see it kind of staircasey, to me that shows that this demand zone is very weak. It's kind of just people picking up nickels in front of a steamroller, and then the steamroller hits. So watch out for that. This potentially being an area of interest to pivot off of to continue this overall kind of short-term structural downtrend. Because again, didn't make a high, didn't break this high. So lower highs usually lead to lower lows. Hence this level right here. All right, got it? Got it.
Yeah.
Let's transition. What is this? USD... CNH, What am I doing? Reload this. Minor intermission, guys. Okay, what are we at? What is this? CNH. Do I care about CNH? No. Let's do... feel like we're doing a lot of USD pairs. Let's do Euro. What is that? Can't read these. Okay, so Euro JPY. Let's do... How do I feel about this? Not exciting. Euro, British pound, maybe. Okay, so this looks potentially interesting. So let's go back to the daily. It has a messy chart. Okay, so it looks like we could be shifting into an uptrend. I mean, if you consider any of these, the highs, obviously we broke structure with this, especially, and we broke above all of these. So we broke a new high. Presumably, we're going to make a higher low now because we got this high. And what was the low off of which that high was made? This one right here. So I would imagine the chance of us pulling liquidity from this area is decent. Now, this zone is a little more complicated. Maybe when we go down to the smaller charts, let me just get this out there so we can find it easier. But let's go down to the 30-minute and check that zone. It looks like we could have already seen a little bit of reaction, so I might be watching for a higher low off at this level. Whoa. Okay, so this is that area we mapped out. Let's tighten this up, clean it up. Okay, so this is our area right here that I'd probably be looking out for. We'll do the candle body. Okay, this in particular, I'll even do this with a line. So this is where the real heart of this impulse started. Oh, I just realized this is not even green. There we go. Okay. So this is our demand zone. Because we have this kind of consolidation, but this is where the impulse really started, right? This area, this range, though. So if we do have leftover orders from the original impulse, they're probably in here. This is why it is our area of interest.
Yep.
Okay, this is, let me go to a higher time frame so this doesn't take as long. Let me just roll this out. And the reason I'm highlighting this level is because this is, like, if we're getting really granular with our entries, this is, in my opinion, that green dashed line. That is the like specific, if I have to pick one exact level, like you're picking, you know, like whatever it is, down to the decimal, you know, 0.83293, whatever that is. That is the level. So I just want to map that out just for more context. But really anything, any reaction within the zone, I think would be appropriate. And we already are seeing this. So pretty clear and obvious. Like, look where I just mapped that out. Now, I wasn't really paying attention to this. And it's no coincidence that it lined up perfectly with these candle closes. Or this candle open. But you know what I mean. Where the candle bodies are. So we're pulling liquidity from the zone. And what I want to see is, so we have this low, right? Reaction to the zone. Now I want to see a higher low formed. If we break below this, that shows me that maybe the demand isn't strong enough and I want to sit it out. I don't want to be going long until it starts shifting that trend into a structural uptrend. So I want to see price make another lower or higher low. Now who knows where that's going to be. I'm not really seeing any good levels. Let me go down to the 15 minutes, see if there's anything. So we could actually be there right now, potentially this, because we had this impulse kind of range traded, and then another impulse up. So this is where the liquidity could be, but we're not seeing a super strong reaction. Coffee break. All right, back to it. So we're not seeing a super strong reaction to this level. At least it doesn't seem that way. What the heck was that? Now this is a kind of a messy area. I'm just kind of doing this zone right here to think out loud because I'm not seeing. I mean, this is where the impulse started, so you can see I usually start my zones around where the last, in the case of an upward impulse, where the last sell candle was. I generally like to base my zones off of that level. Obviously context matters, but in this case, this is what I'm doing because there isn't really a neat zone. I mean, you could even choose this kind of whole like order block zone, but that's just too wide for me.
That's what she said.
Okay, so now we are seeing at least somewhat of a reaction. I mean, the fact that we have a green candle at all is helpful, but I don't know how much I trust it. I think it's very possible we come back into this zone in general to retest. So what I would be looking at is, yeah, I don't know if I like that. So, see, we came back. See this wick? We came back in, kind of really pulled liquidity from this potential area. So tough to say now. Possibly looking at this level. Again, the lowest red candle. Just the top of that. So, I don't know. If you're trying to take the safest bet, again, I'm not really convinced. I don't know if I like the price action. Nothing screaming. Like, no levels are really very obvious to me. I mean, like I said, you could use this as a potential demand. I don't know how I feel about that. I would prefer to see it come back into this higher time frame, like real demand that started this impulse, and just make a higher low off of maybe this green dashed line that you can probably barely see. So if you're basing it off of that, invalidation is pretty obvious. Just like I said, not making a lower low. So base your stop off of this level right there. And then we could assume that if we're making that lower low or that higher low, that we're going to make a higher high. So right there, pretty decent risk to reward, 5R. And I think that the chances of that are decent. Could even potentially be looking to ride it all the way to this level. Because this is clearly supply. I mean, we had this consolidation and then very, very strong impulse down. Haven't retested that level yet. So something tells me if and when price does, we could definitely see a strong reaction, or at least a reaction. Yeah, and I don't hate this level, but I would prefer, especially for the risk to reward, because like I said, this is the real low that we're focused on. And if my entry was up in this zone, the risk to reward is a little bit just whack, for lack of a better term. So I would prefer to enter around here.
That's what she said.
Getting carried away. We're having a good time, guys. It's Friday. It's Friday. We're having a good time. So yeah, this is what I would be eyeing for. Euro GBP. Can almost never get that right. GBP. Because if we are going to shift trend, I think this is the level off of which we would pivot. And you could say that we are already kind of breaking structure. I mean, if you count, here, let me get this. So here was that high. Here's a low. Didn't really, I mean, if you want to call this the high, I don't know. Made another low, lower high, lower low, lower high. And then we made a higher low right here and a higher high, breaking this one for sure. So even if you don't consider this that high, you broke structure right here. So if that is a real break of structure, we're looking for that lower low to find buys to target the next higher high. And that level for me, the most ideal one is this, just because it lines up with the, my risk to reward would make more sense, and it lines up nicely with this low. So yeah, I'd be eyeing this level. What is it? I'll go a little bit above that green line just in case. So around 0.83575, give or take. And then again, yeah, targeting the high around 0.84155. All right, got it?
Yep.
Moving on. What do we got? Euro CNH. Do we care about this? What does that look like? Let's get context. I always like to start at the higher time frames, just because I feel like if you're starting at the lower time frame, you have no context. Yeah, I know if you're a lower time frame trader, sometimes you don't need it, but I still think it's helpful to establish an overall bias. If you know you're in an uptrend or a downtrend, counter trend, whatever it is, that can help you inform your lower time frame bias, because you're in a structural uptrend, so maybe there's a higher probability that longs will turn out to be profitable trades or good trades. So it can just help you a little bit, because if you are in an uptrend, the majority of trades are probably going to be long, right? Because most of price action is going up. So if you're in a higher time frame uptrend, you probably want to be looking for buys more than sells, even if you see a lower time frame counter trend, which is not like, it's not bad to take those, but I think it's still helpful to view everything in context from the higher time frame down, even to like to the 1 minute. Sometimes it can even be helpful to draw out. So for each chart, so you see like daily, you're like up, and then we'll do whatever, 8 hour up, 4 hour up, and then you're like 1 hour down, 30 minute down, 15 minute down, and 5 minute up. And this could be helpful for you just as a good reference. Now I'd make it look neater than that, but you know, for the sake of speed. So this can be helpful. So when you're doing your analysis, you start higher time frame. You're like, okay, so daily time frame, and this is not actually representative of this. Obviously, I just did it quickly. But I mean, clearly, because the daily is almost certainly down given this price action. But I'm just saying, as an example, this is a good way to give you that context. You can use this as a little note, as a reference when you're doing your trading. You're like, okay, I'm looking at this on like, I mean, we're on the daily right now, but say I'm on like the 15 minute. Oh shit. Here, let me. Put it right there. There we go. So where'd it go? Come on, TradingView. Why do you do this to me? The fuck is it? The hell, dude?
Huh?
Whatever. I didn't want to see it down there anyway. So what? I'll just get back into my point. Who cares? So it's a good reference because you can look at it when you're getting more granular on like the 15 minute, 5 minute, 1 minute, 30 minute, whatever it is. And you look at your notes and you're like, okay, well, we're in the daily chart, we're in an uptrend. In the 8 hour, we're in an uptrend, 4 hour uptrend, 1 hour downtrend. And so viewing all the different time frames and context about where you are in the overall structure, the overall trend, whether it's up, down, sideways, it can be very helpful because you don't want to be overly bullish if the 5 minute is up and everything else is down, right? Or if like just the lower time frame, so call it like 30 minute and below, they're all up, but everything else is down because the higher time frame is king, the lower time frame is queen. So you want to focus on the higher time frame because that is eventually what's kind of going to be dictating the lower time frame. Okay, so we got that. Now let's take a look at this. So, yeah, I don't know how I feel about this. Get rid of that. So how do I feel about this? I guess we can consider this whole thing a range. I don't know how I feel about that though. So we dipped above or dipped below, got a range deviation, but we are closing above, and I think this is a good risk to reward opportunity just because you can have a pretty tight stop with potentially a very good, like I said, good risk to reward. Even if you're just targeting this midpoint, that's pretty decent. Now I probably wouldn't take this, but the fact that we closed below this range and now are clearing above it and holding that range, it signals to me that maybe the market is ready to still stay within this range or go back into it. It left, kind of teased people, grabbed liquidity maybe. A lot of times you have institutions, they wait till price leaves leaves a range before they enter their huge positions. They get this big buy right here. And so you could base it off this range. You really never know. I don't think it's a terrible trade idea. Like I said, I probably wouldn't take it, but you could be a little bit more risk averse and base it off of maybe this level. You're hoping to kind of jump back into demand off of this impulse. If we get a little bit lower time frame. Yeah, so where are we right now? So we reacted. We got this kind of relatively equal lows, mostly chop. This is really just a little bit of a range. Yeah, price action is kind of messy. Hard to really find something that screams demand level. But the only reason I like this is because if we are going to continue back into this trend, even if we dip below, the invalidation level would be this level right here, right? We're assuming we're not going to be making a lower low. We just dipped out, dipped below this range, came back in, and now we're going to, even if we dip down here, eventually make a high again, at least above this, into this range again. Now you can really take an entry wherever you want if that is your hypothesis, but the invalidation level is this in my mind. It's the low, because if we're making a new low, it's over. Probably wrong about the trade, almost certainly. And that means I want my stop there, because I don't want to be stopped out of the trade unless I'm convinced it's been invalidated and the trade idea is no longer good, invalid. So, and it does on a higher time frame, it makes a little bit more sense, just because this was kind of this range around the bottom before we started moving higher. So that's one reason I like it. When you get in the lower time frame, it kind of looked messy, you saw, but in general, I don't think this is a terrible trade idea. The risk to reward isn't the best, unfortunately. And again, probably why I wouldn't be taking it. But even if we tighten that up, so stop still below this, and then yeah, see, I'd probably want to line up my take profit. I mean, you generally choose the previous high, but we have this really, really, really clear supply. I mean, look how just crazy steep and fast this drop was. So I probably wouldn't want to have my take profit really beyond that. And it lines up really well with this high too. So if we make a new high, maybe pull liquidity from this zone. I do like that. But the risk to reward is a little off. If you want to take it here, tighten your stop, go for it. But like I said, I don't like to take anything that's less than a 3R trade. So I would probably just roll my entry down a little bit below, right around here, if I were going to place this. But yeah, nothing too crazy. If you don't like a trade, it's not convincing you that it's worth it, don't take it. That's the beauty of trading. I think, a lot of traders say this, but Warren Buffett, I think, is one. There are no called strikes in investing. If you don't swing, it's not like you're going to be kicked out because you got 3 strikes and you're good, or you're bad, you're out, you're done, whatever. You can take as many strikes as you need. You'd wait for your perfect pitch, whatever one you think you're going to hit out of the park. That's the beauty of trading. So if it isn't looking good, you don't have to take it. That's the kind of the point. You want to focus on the ones where you have the highest conviction. So let's transition to let's do Eurocad. Let me get rid of all this nonsense. So what are we seeing? Now this looks messy AF. But we have this range, these pretty much equal lows right here. And now we did make a short-term high, right? So break a structure potentially. We get above. So definitely in a downtrend. Let's just backtrack a little bit. So we got this high, made a low, a lower high, a lower low, a lower high, lower low, lower high, lower low, and now we've made a higher high. So if this is a real break of structure, maybe we can be looking for longs off of a new lower, or higher. I always get that off. A new higher low. So where is that level? Where would it be? If we were going to pivot, I think this is probably the ideal spot, because this is our big impulse that hasn't been tested again. There is still a lot of imbalance left here. Potential orders that never got filled because of how strong and fast that impulse was. So I would be eyeing this level, and what I love about it is it's a very tight little range right here. So the risk to reward, I can already tell, is just going to be very, very agreeable. So invalidation just below that, entry at the top of this right here where this imbalance is. We got to fill this imbalance. Never really retested it. Looks like we're showing some weakness right now. Could be headed back down to this area. And target the high. The high. No, the previous high, this high. So, because if we're making a lower or higher low, we can, our base case can be that we're going to make a higher high above this level right here. So I do like this as a trade idea. I think this is pretty decent. And mostly, like, what's the real reason I'm convinced? Because of this right here. Let me get my... We had a break of structure, right? Break a structure. And whenever you see a break of structure, you can... It's often safe to assume the trend is shifting direction. It's no longer maintaining that structure of lower lows and lower highs. We've made a higher high, and now we're looking for a higher low. And this is the level of interest for that higher low if it were to, you know, actually come to be, whatever you want to actually happen. And yeah, this is pretty decent. You know, risk to reward almost 4R, pretty good. And clear invalidation level right below this level. You could even tighten it a little bit if you wanted to. So we got an actual 4R trade. And again, this is Eurocad. Definitely watching this. I like this level. We'll see. Now again, let me just stress this real quick. Not investment advice.
What?
If you follow my trades, you will probably lose money. If you do the opposite of my trades, you will probably lose money.
Huh?
This is just for educational purposes, you know? We like to identify structure, identify potential levels that are consistent with that we would move, pivot off of, and use that however you may. Educational purposes. Yeah, that's why my lawyer doesn't want me to get sued over here. Just kidding, I don't have a lawyer, guys. Okay, so I think it's enough euro pairs. Let's transition to, what time is it right now? Almost 9:45. So let's do a few JPY pairs. What are we seeing here? Okay, higher time frame. Get that context. Okay, so been on a tear recently. Obviously, JPY for the most part has been depreciating relative to most currencies, aside from this retracement we got. But this retracement is still within the range. Now, we didn't make, so again, let's identify our levels. So we got this low that led to this high. We made a higher low, and we've now made lower highs, a number of them, right? Nothing that broke above this. We're just consolidating. So that, to me, is showing weakness, hence this, obviously. You know, hindsight's 2020, but if we're not making this high, that shows me that the market is maybe not strong enough to make that high. We're consolidating, maybe distributing before we break below this level right here. Now, based off what I'm seeing right now, potentially looking for a retracement and a sell off of this area right here. What I like about this is, number one, it lines up with this impulse down, which is kind of, actually, let me tighten this. Or not tighten it, loosen it. Let me loosen you up.
That's what she said.
Yeah, so I like it because it lines up nicely with this impulse, this supply zone. And also, it would be in premium. So this is the 50% level of this range. And if we have a retracement, we would dip just into premium territory, which I like to be in if I'm taking a sell. So come into this level, and then we retrace, continue this downtrend, at the very least to the range low, if not all the way eventually down to start this new trend of making lower lows. Because we didn't make this high, so I know I'm not convinced that the trend is shifting yet, but given that we haven't made a higher high, I am very open to the idea that a lower low is in store below this right here. So that's what I'd be looking at for right now for Nzd Jpy. And if I had to guess, this is probably a similar structure to the Aussie dollar JPY, so I probably will skip that one. Yeah, not not the highest conviction, but I do like it. I do like this trade. Actually, let me get the order in to see what the risk to reward would be, because it doesn't look like it's going to be super good. So I would probably move this to around the midpoint and give enough breathing room to about a 3. That's probably good, just above that wick. Perfect. Yeah, so something around here. This is a decent trade idea, like I said. Not amazingly high conviction, but I do like it. All right, transitioning to GJ. Woo! Woo! Coffee. Okay. So again, really actually similar price action to NZD. I'll probably skip this one. I'll just outline this real quick, but kind of the same thing, right? Although we did make a higher high right there, interesting, but we're obviously showing weakness. Possibly going to be looking to somewhere in this level, at the very least, the range low to pull liquidity from. I mean, we've already seen that a number of times, but we're making, we had this low that led to this high, and we made a low here and a lower high. Now we're making a higher low, so we're kind of getting this like triangular formation, that flag formation. Looks like, I don't know, potentially if we were going to continue that flag formation, not that I trade off of those, this is kind of potentially where the bottom would be before we maybe get some more volatility entering the market, right when you get around that, like, I'll just draw this out real quick. Kind of this basic structure where you get these flags. The closer you get to this peak spot, the more likely you are to have some sort of volatility that just sends price into whatever new direction, whether it's up or down. Now, again, I don't trade off of that. That's like more of a like retail 101 kind of thing, but still, it does play out sometimes, and it looks like it could be happening right now. Still not going to trade that, but this level right here, potentially watching out for on that retracement. Yeah, I probably would have less conviction in this one just because of this higher high complicating things. But let's move on. So let's do Swiss JPY. Let's start fresh. We like that. We're having a good time, guys. Okay, so let's start off just drawing a little range, because this is pretty obviously a range that we got going here. Now, what am I looking at? I really like this level right here. Got some demand. It's right below the range, which I would say is a confluence, because you bust through the range to get liquidity from any stops that are right here, and then you pull liquidity from this demand zone after this big impulse right here, right? And yeah, but now let's identify the structure. So we have this low that led to this large impulse, made a high, and we made a higher low, higher high, higher low, higher high. So this, I don't know, when you have these small consolidations, I think the low is less reliable, but I would still strongly consider this as the low off of which this high is built or made. off of which this high was made, and so this potentially being the area of interest for price to retrace into and continue the uptrend. Now, what am I seeing here? I'm trying to see how this relates to maybe like a wave theory play, but it looks like, because this maybe would be the third impulse right here because it's the largest one. So you got this 1, 2, 3, in which case we could see a 4 and then a 5 that makes a new high. I don't think this is the textbook example, so I don't know if I would rely on the wave theory analysis for this particular price structure. Just trying to eyeball it and see what I see.
Totally.
So yeah, I would like to see price retrace into this level potentially for a buy. Maybe even the top. Let's see how that plays out. So make a new high, and now with these ranges, generally price doesn't dip all the way down, like all the way to the bottom. Totally could happen. I do usually like to have my invalidation at the actual invalidation level, which would be here. So you can do one of two things. You could either, well, I guess maybe three things, but you could suffer the shitty risk to reward, which I don't do. That's not my strategy. You could run this up until you get to 3 or whatever risk to reward you like and maintain that top entry. Or you could do the opposite. Keep your invalidation right here and pull your entry down until you get to your appropriate risk to reward, which for me is at least 3. I usually do this because, like I said, I like to keep my invalidation at the actual invalidation level, but totally understandable to, in this case, I would say to have it like this, just because, actually, I mean, to move up the stop, just because when you have these ranges, very often it just dips into the very top and then pushes back up. Now, is that going to happen? I don't know. Is it my base case? I don't even know. But this is, I think, a decent trade idea, especially because we're already kind of seeing it show weakness. I would love to see it blow through this and pull liquidity from this previous range where we had this large impulse that made that high. So we come back into this area, and that would be mostly consistent with making a higher low, this being the low that it would make a higher low, in relation to. So yeah, that's what we'll be watching for the Swiss yen. And let's do CAD JPY real quick. Actually, I feel like I talked about these before. Let me do something new. Real quick. Let's do, what is this? British pound, franc. I don't know how I feel about that. What does that look like? Is there something else we can do? Euro AUD. Is that a good one? Let's do Euro AUD. I like it. Okay. Remove these drawings. Get out of here. Probably draw them all right back again. So we got this range, right? No, actually, we'll leave it like that because that looks like it was a classic deviation. Okay. So we got potential supply up here. Actually, let me just save myself the color coding. Whoops. Come on. Okay, so supply up here around the range high makes sense, and then we had this large impulse straight down. So a lot of imbalance potentially left in this area. If price returned, wouldn't be surprised to dip in here and then continue down. A little. Okay, so, and then potential demand right here. Looks like we already kind of tested it a little bit. I might dip down to a lower time frame just to get a better idea of where that might actually be. We could be reacting to it right now, as you can see. But so let's do what we always do. Identify structure. So we had, let's start from here actually. So we had this high, made a low, made a lower high, made a lower low, made a lower high. I mean, I guess you could actually even consider this a break of structure potentially here. But at the very least, we started making higher lows, and then eventually that led to this break of structure right here, actually. So this was that high, and then this broke that high. So if hard to really, I would say this is probably the low off of which that high was made. So you could consider, if you know this consistent with structure, if it bounces off of this level. Obviously there's no other level for it to bounce off of, so that can add to maybe your conviction or not. And yeah, I would probably target this level just because I think the risk to reward would still be good, and you don't have to necessarily be banking on an actual new high. But oftentimes when you see these ranges and then you see a little deviation right here, you will see the same thing happen. So price come down and does the same exact thing right here, a deviation, and then comes back in. It kind of just fucks everybody, all the retail traders, because it gets people who had their stops up here, and then it gets all the people who had their stops right here. Like if, you know, say I was like, okay, we're playing off this demand zone, invalidation. Come on, you bitch, dude. Ugh. Pain in my ass. Okay. So you enter here, your invalidation is like right there because you're targeting, you know, this demand and, you know, hoping for it to get all the way up here. Price comes in, dips right below, and then continues higher. That is something that happens very often in ranges, not so much with trending price action, because you're usually being very consistent with the higher lows, higher highs, or whatever it is. But let's drop down to lower time frame, see if there's a specific level that we can look to right here. Okay. Yeah, definitely nothing screaming, but we got maybe this range. We'll even start it from there, right? Okay. Yeah, I don't know if I'm that confident about this zone, but I do think if we were going to play off of something, that's probably the general area. We're already seeing, we saw a reaction here, and we made a, interesting. You know, what is this level based off of? Let's do a little backward. Okay, so it looks like we saw a reaction to this zone. Lines up pretty nicely. Yeah, okay. All right. Okay, so we're getting a little bit more granular. So we had a pretty strong reaction here, and we made a higher, the hell out of here. Made a higher high, so break a structure. Now, if we are going to continue the structure, where is the higher low that we will make? If this ends up being the demand off of which we pivot, we could probably look to this general area right here, which we're pretty much trading in right now. And if not that, I do like this level. We already kind of tested it. You can see clearly this would have been nice to play off of earlier, you know, for like a shorter time frame trade. We had this impulse, had this imbalance pretty much right here where this that red wick is, and we came back in, tested it pretty perfectly, and then continued higher. So that zone has already been tested, meaning I don't necessarily view it as a high conviction entry point now that it's already been tested. So maybe it would be this higher area right here in the zone, and then we go from, call it here, maybe even make this and then make it higher. Yeah, not sure how I feel about this. Maybe I would probably lower this entry a little bit until we get to bada boom. Now, the only reason I would even consider this is just because we made this higher high right here, technically, you know, break a structure for this, and we are showing a decent reaction, a strong reaction to that demand zone. Because, you know, if you go back, this clearly is a good demand. I mean, look at this reaction right here that we had. It was tested before. So we had this impulse, right? So we had demand right here. And then we had this huge impulse, pretty sizable. And then we came straight back down, tested it again, didn't break below. So we made that higher low. And then we reacted again. And then we even reacted to this as a new demand zone with this price right here, which led to an even larger impulse. So clearly a lot of buying going on in this general area, a lot of orders, a lot of liquidity entering the market. So it doesn't surprise me that we're seeing a reaction to that level, and we busted this high and made a new higher high. So love to see that, and this is why I am maybe a little bit bullish and looking for longs. It's just these areas are a little messy, so hard to say exactly what I would commit to. But yeah, maybe in this general area. Again, this is the real low, the real invalidation level. So if you wanted to be absolutely risk averse as you can, you could even base it off of this right here. So invalidation right below there, targeting a new high. And then I would probably just roll my entry up as far as I will tolerate. And it lines up nicely with that. So get a nice 3R trade potentially. Yeah. And again, this is if you're trying to really base it off of this invalidation, the actual low. Now it's very, very possible that price just bounces off at this level and continues higher. Whichever you prefer. Really depends. Obviously, you know, to each their own. I probably won't be taking it just because I'm not all that convinced, but and this is definitely a counter trend trade, although it does look like, I mean, short-term counter trend, because like I said, we could still be, we made this low and a higher high, so this would be consistent with a potential higher low, higher time frame that pushes higher. Said higher a lot. Yeah, so yeah, pretty much does it for Euro AD, I guess. So lower time frame. That trade that I was talking about, probably, you know, anywhere in this region, I think would be consistent with structure for price to pivot from and eventually make a higher high. Hard to say where we would be headed after that, longer term, like higher time frame. If we would be, you know, if this would be just kind of like a short-lived counter trend that just maybe goes all the way up to this area right here, or maybe up here, or even goes all the way up to the range high or back up to make that new high, right? Who knows? But those are my thoughts on Euro AUD. And with that, I suppose, yeah, I guess that we can call it there. That's pretty much all I have for you. So, with that, yeah, I will leave you with stay happy, humble, and most importantly, solvent.
And we say bye-bye.
All right, take it easy, guys.